Here to help us get an idea of what those results might look like in light of the current landscape for capital markets is Burke Dempsey, head of investment banking and capital markets at Wedbush. Burke, thanks for coming in. Happy Friday. So Q4 wasn't great for deal making, but you see a pipeline building?
Yeah, I can say for sure. We were working all during the holidays. We were busy with stocks, bonds. There's even an IPO today, securitizations, and my talks with my other colleagues on the street were very busy.
So it doesn't seem like that much strength is necessarily priced in here for what people expect from the banks. How long is that pipeline, you think, going to be?
As far as capital markets, I think you got to wait for the year-end audits in a number of cases, so you won't see anything till for this quarter, late February, March, and then into April. I think you're going to see a very big spring.
How's the calculus between do I IPO or do I look to get acquired, IPOs versus M&A, has that shifted enough that the balance is tilting back toward IPOs?
There's a couple ways to think about that. Today we saw an IPO that was priced and went up 15%. And over the years, the rule of thought has been that if you can offer a 15% pop, that's reasonable. So I think we're starting to get back to reasonableness. The other thing to think about, though, is the PE firms have a big backlog of deals. There's like $1.4 trillion of companies they've owned for over 4 years. And then there's 800 unicorns that are hungry unicorns that need financing, too. And that backlog, even if we took just the top 1 or 2%, it would have more than doubled last year's drought. It would have been a much better year.
Has the flirtation with direct listings and SPACs kind of evaporated?
I think they're in the future. I think the SPAC is a tool, just like direct listing can be a tool. I think.
Yeah, but is it a screwdriver or is it that bandsaw that you only use once every once in a while?
Maybe it's a Phillips head. Yeah, I don't know. But the SPACs, I think, got a little bit over their skis. We're now in SPAC 4.0 technology, and they'll probably be SPAC 5.0 technology, and they'll get better. But as far as direct listings, I think that's a comer because you have all these private companies that have been. They're grown up. They're fairly large companies, and they're ready. They could be public. They just don't like the valuation. We'll let the market decide, and I think you'll see more of those. Okay.
Now, tell me about sectors that you find promising. Biotech, fintech. Why?
Well, biotech is sort of a success begets success moment right now. I think that the talent we've got discovering these drugs and the technology available to do the work they need to do, it's spiraling in a positive way. And you're seeing more discovery begets more discovery. And the market's wide open now. So investors are really interested in what we have to offer.
And AI?
AI, I think, is coming. It's along the way. I think I'd first take a look maybe at cyber. The bad guys keep trying to break in, and we got to have more defenses. But AI, we did a survey, and 80% of the companies we surveyed said they found 10 different use cases. So that's pretty significant. From a few years ago, we had a conference, and we talked about it, and everyone was wondering how to do it. And now they really want to think about doing it. So I think you're going to see a big spend.
I keep hearing software companies, AI-related, saying they don't think they can get the valuation that they deserve in the public markets yet.
Well, I mean, valuation is in the eye of the beholder. And if you look okay, let's go back to why last year didn't work. The pop that we expected was more like a fizz, right? We took the top 5 or 7 IPOs. They averaged only about 5.3%. And I was shocked by that, actually, because that wasn't much better than you could have gotten in a treasury. So why would any investor get off the chair to make an investment like that?